All right, everybody. Good morning. Happy Friday. First week of September down, almost back to school. It's going to be a quick one again for me today. My daughter is still home, sick but better. Thanks. So it's also funny. Like summer was completely canceled here in the Baltics, and now all of a sudden we have nice, sunny, warm days. So don't know where it is, wherever you are, but hope everybody's doing well. Gonna get right into it. We talked a lot about. See if I can find it. Of course, I can't. This chart yesterday, which I'm gonna come back to. This is a new one. Took a while to sort of conceptualize and get together, but it's actually there's a lot of incredible info here as far as what the power curve represents. But I want to start here because I got a lot of good comments from this chart when I posted it on Twitter yesterday. Here's a comment from Eric. So the capital intensity to reach new heights changes this logic. This just acts as though there's infinite liquidity already. Once BTC hits 10 trillion market cap, or even now, this is not as easy a progression. Don't put your faith in anything. I want to say this is a good question. This is a good thought. It's good to address this idea. All right. So don't take my word for it. Do your own research. Never financial advice. But this is actually a great point to talk about, say, what the rest of the global financial markets do because they're exponential versus what Bitcoin does because it's power. All right. This is a great question, a great point. All right. This is not, if we understand the Bitcoin markets and many things in Bitcoin to move in power, there's a key word here, which is proportional. All right. So as long as Bitcoin stays along this trend line, which it has, the price is growing proportionately with itself, no matter else what is going on in the markets. And of course, there's a lot always going on in the markets, and new liquidity begets new liquidity. This idea is actually it's a good point, right? It's a really good point, right? There's this just acts as though there's infinite liquidity already. That's not what is happening here. Okay. As I wrote, this trend line is scale invariant. All right, it is different than other financial markets. It is proportional or sustainable. I talk about this a lot, and I'll try to enlighten a little bit more on this quick stream today. Bitcoin is a straight line, not on log linear like most financial markets, but on log log. Okay, so here I picked one up from Giovanni. He was taking Plan B to task here, which he likes to do in this post. But he's moved the power law, the regression down a little bit. Mine, I just typically keep the OLS, which is more in the middle, more the full regression trend line. He's trying to catch different points here, a little bit more as a support trend line. You can move it all around. When you get something that looks like a straight line on log scale, it's power. If this was a linear scale, all right, the linear scale, you can use the old, grade school math, rise over run, and just see how something grows and just have a normal understanding. But when we go into log space and we put it onto, and we find a straight line, we can also determine some interesting characteristics of the system. All right. And that is whatever's happening here, as Giovanni is saying, we go shift X1 to shift Y1 or shift X2 to shift Y2. All right. It is basically proportional. It's proportional. All right. So if we go back to this comment, to this idea, It's just not how this model acts. All right. It does not act as though there's infinite liquidity. It does not act that once Bitcoin hits a 10 trillion market cap or even later or earlier, that somehow it will be harder or easier to follow the trend. The trend is actually proportional. It's not exponential. So it only assumes proportionate increases. When there's a proportionate increase in value, it will assume proportionate increase in demand. It's not what the rest of the entire financial world is based on, which is exponential growth. All right, here's exponential growth for the price of gold. How do I want to explain this? Let's take this off. Let's put it here. All right, it's log space, but only log linear. Okay, we're still, when we track days from the Nixon shock, all right, which is what it's actually months in this case because it's such a long time period. This is a monthly chart. First of all, it's not a great fit. You see, you have to, to fit back in the day, you have to take the trend line to $40. Sorry, no, $130 when the price was actually 40 at this time. All right. This is market price, by the way. The official price was moving up to over $40 an ounce, even though it was $35 an ounce before this. It's called the Smithsonian Agreement, and that's still what the U.S. today values the gold on its balance sheet, a little over $40 per ounce. In any event, exponential trends are volatile. Exponential trends can result in crazy projections that could break. This brings us back to our Jeffrey West super exponential growth discussion. If we have to keep growing to keep ahead of all the fiat interest that is produced in the system, and again, fiat interest itself is a compounding function. It's an exponential function. I can't say this enough. Everything in the financial marketplace today is an exponential compound growth function. That is, in my opinion, it's because of interest. And I don't say it's actually bad or good. It's just how the system has worked for thousands of years. But it's, let's say, more prone to find imbalances in the system when, say, gold is increasing at this exponential growth and the stock market might be going at this and home prices at this. It's easier to find imbalances in the system. What I mean by that is, say you're renting and you're renting a house and you have this contract where your rent needs to go up 5% a year, whatever. It's a lot, or it used to be a lot, maybe not anymore. And let's say your income only grows at 2% per year. All right. It's actually natural in the traditional TradFi world that these things would spread apart. And they're unsustainable. That by definition, they're unsustainable differences. Okay. At some point, you can imagine if rent prices or whatever, mortgage rates, it's a little bit weirder with mortgage rates. That's why I'm just using renting. If your rent is increasing at 5% per year in a compounding fashion, but your salary only increases at 2 or 3% per year, by definition, that's an unsustainable movement. But that's what happens in the financial system every day. We reset things, people go bankrupt, contracts have to be reworked. It's the nature of the TradFi system. All right, so back to this comment. I would agree with him, Eric here, if the capital intent, I would agree with him if Bitcoin was on an exponential curve, then I would say that the capital intensity to reach new heights changes this logic. But this is a great, it's a great question. But the nature of the Bitcoin curve actually addresses this precisely. It's completely proportional. And that's why when we put things in log space, all right, so here we have log price, and then here this is log days. Okay, we're about the 6,000th day of Bitcoin. So this chart has nothing to do with dates, by the way, and neither does mine. My charts, there's days sitting behind these dates. I'm just showing you dates for convenience. My log bottom is very messed up. It's, you know, here's a log. I mean, it's a straight line, but it's harder to see with my software. There you can see it's a straight line in log space. Ignore these dates. It's also broken. The tooltip dates work. Anyway, let's go to this chart. All right, what Giovanni wrote. All right, with this power formula, with these coefficients, which if you want to think about it, at the end of the day, it works out to something like every 12% increase in the life of Bitcoin will double the price. That's what it works out to. That 12% is not a fixed number. In the exponential world, we have doubling time. That is a fixed number. So you can find something like the rule of 72, 10% return. Go back, think about our renting analogy. A 10% return a year would double your investment every, not 10 years, 7.2 years. That's what compounding growth does. It's actually faster than what you think. It's exponential and it's constant. It's constant. A power curve is not constant. It's proportional. Okay? So again, to explain the proportionality of Bitcoin, in terms of doubling, the Bitcoin price will double. And when I say double, I mean the Bitcoin adoption, the system, all of the confluence of factors that make up supply-demand dynamics in the marketplace, right, which is a lot of stuff. Obviously, it's no one can quantify this. This is why the easiest thing is just to look at price. It doesn't double constantly. It doesn't double at, say, every 7.2 years, which a 10% compound growth would do. In the Bitcoin system, it doubles for every 12.7% increase in the life of the system. So if you think back here, when Bitcoin was, you know, under a penny, all right, which is what this is saying here, a 12.7% increase in the life of Bitcoin can be 10 days, 100 days. All right, pick your time on this curve. Now, when we're at about 6,000 days of Bitcoin, a 12.7% increase in the life of Bitcoin is another 750 days, or whatever it is right now. It's something like that. I haven't checked the exact numbers. This is an extremely important concept for what Bitcoin is doing and why it's completely different than this take about how there's not going to be enough liquidity, or it's not, you know, it's set up for some unsustainable explosion. That's not what the power curve is saying. The power curve is saying it is proportional, it is sustainable. It's actually a good thing. It's a good thing that Bitcoin grows this way. It's a remarkably robust indicator, and I have never seen a financial indicator in anything in the TradFi world work like this. And I speak with, you know, I've been running numbers for 20 years in my professional life. All right, I've been doing charts like this and regressions and stuff for 20 years. Everything moves exponentially. Interest rates, the stock market, the gold market. If you plot it and you go on a long enough time period, it may not be a great fit like gold, but you're going to find a straight line on log linear scale. Log linear, not log log. So that itself is one of the beautiful things about what Bitcoin is, what it's like, the endogenous factors of the system, as Marty was talking about when I was talking with him the other day on this. The other word you can say is scale invariance. All right, so there is a scale invariance to Bitcoin. All right, you look here, you look here, you look here. It's still going to take another 12.7% increase in the life of Bitcoin for this curve to double. Okay. And I actually have it on my website at the moment. We can just show you again because it's always helpful. Go here, slowly. I don't know why my computer is slow this morning. We got charts, still only one chart on this revised website. I'm sorry, but you can see the power curve. You can see the power curve on log space. All right. And here. Okay. So right now we are somewhere, again, it doesn't matter where you pick. I picked from this date because Bitcoin Pizza Day is the first date of data for me. All right, for me. So the trend would be 6 cents, which is actually way higher than the price. It was sub penny, right? Laszlo's transaction. In 2010, May 22nd. Okay. So a 12 point, here's our proportionality. You see it? See, this is proportionality. Increase in time to double. Not in years or constant rate, but this is an increase in the time, the life cycle of Bitcoin. It takes 12.7% increase. So back in the early days, when Bitcoin was only 569 days old, 12.7% was 64 days. Actually, it goes from here, right? So 505 gets you to 64, 12.7. As we move out, say around the 2013 boom, a 12.7% increase in the life of Bitcoin was 213 days. Okay. Now we're in this epoch, somewhere we're moving from here to here. Okay. So my base, it doesn't matter. You can pick any point on the curve, but my example would be right here from March 2024. That was 5,542 days of Bitcoin. 705 days will take us to that 12.7% number, which would double the curve from 65K to 130K, which is projected to be in February of next year. All right. This is the key to how power curves, power regressions work. They are not like exponential. They just aren't. The amazing thing is the rest of the financial world works in exponential. So probably always more to say on this, and I will continue. But look, it's a good question. I understand it. I understand the concern, but the the curve itself addresses this concern. The curve itself is not telling you it's going to take you to some unsustainable high based on something that has no concept with the past. It's saying that Bitcoin's only going to grow and double in a proportionate factor to itself, how it has done in the past, which is remarkable. It's a remarkable sort of sustainable phenomenon that Bitcoin is doing. Good morning, RV. Thank you again for your email. I know I responded, but it's going to take me some time. Good morning, Bitcoin Libertarian. Look forward to chatting with you as well, sir. So let's go back here. This is, again, pretty cool if you see where it happens. It took a while for Bitcoin to settle into this trend, all right, because you can see here this is kind of, if you can imagine, this is how the power trend looked at the time, really fast. It's moving faster and then settled down, and then really you can see from about 2016, the dotted black line looks almost exact as the solid black line, which takes all the data. So it's a pretty good fit, good projection. This is when we get into our 96% R squared space. And then the fact that these dotted lines, number 2 and 3, look flat, nearly flat on log scale, means they're pretty good projections. They're not moving around so much. They do move. Okay, first of all, you see that they came down from the really heated days. And they move up a little bit. But on log scale, it looks pretty flat, which means it's a good predictor. And again, I know prediction is a heavy term. I'm just using it as a statistical term. No one knows what's going to happen in the future. No one knows. But we got a lot of information here to draw some comfort in these models. I do indeed. Good morning, Cyrudon. I can pull it up for you. Give me a second. Give me a second. So we'll come back to it. Here's another thing, all right, with volatility. It's true. Bitcoin was returning higher returns right here back in the day, 2010, 2011, with big volatility, right? 30-day rolling could be 20, 30%. Okay. That means 2/3 of the time the price was either moving up or down 20 or 30%. But just like the power curve on the upside for how price looks, this looks like a power curve going down, also scale invariant. And so it's going to account for, the new volatility, pull it down, and it's not necessarily saying that we're not going to get to the normal heights that we have of the curve. So look, here's the curve with the price moving up and down, regular markets, and then I project out on the curve. Okay, let's just zoom in. So we're here. By the way, we're at I'm not sure I can catch it. 4th of September, 4.2% volatility. No, it's the average. Sorry. 1.88 is the rolling 30-day, which is sort of better than the average. Average 4.2, the trend 3.86. You can look at both of them as far as volatility. All right, but as we extend out, what is it saying as we go on this curve? Obviously, it's saying volatility will be lower. All right. But the key here with this trend line volatility is it's proportional to everything that happened in the past. Okay, so even though we had this sort of crazy volatility back in the day, the trend accounts for that. The trend. And it was proportional relative to the size of the system. So again, what this is telling us that is, if the trend line volatility, which you see, we're well under trend actually. Most of the time, we get a few volatile days, which look how the Bitcoin price reacts, right? So we can have a few days like huge green candles go up, and we get sort of at trend or above trend on the. I'm looking now at the green. The green is above trend right here, but most of the time in this bear, we've been under trend, which is pretty wild. Whereas if, say, we go back to 2017, we had many weeks above it. 2021, a few weeks above it. But, you always settle down into something more normal. It's not like Bitcoin stays the most volatile asset. And so, again, predicting out with this proportionality, you're getting into something that is extremely stable, all right, where it used to trend line at, let's just look at the trend again. It used to trend line at 13, 14% per year. Sorry, per day. 13, 14%, it means 2/3 of the time the price was moving up or down 13, 14% a day on a trend. So the fact that we still have huge price values in Bitcoin in dollar terms, yet volatility here in 2041 down to 2.62%, I mean, it's a no-brainer. It's a no-brainer from that side. What I need to do, actually, to show you the difference is to do this chart, extend it out with gold price volatility. It's going to be harder because I got a lot more gold data. Maybe I'll do it from 2008 only. I'm not sure. But you might see Bitcoin look well better than gold here. All right, and so anyway, predicting out gold's price very simply. You can always make huge moves, okay, like we did here in the 70s. Huge moves. We got from $35 an ounce to $800 for 2 seconds in 1980, okay? And then we went down for 20 years. So the growth, of course, changes a lot. But on a trend with 50 years of data for gold, it looks like that. That's what the trend is. All right. But again, this is an exponential trend. This is a very, it's actually a more powerful trend than the power curve. And then I would argue by definition, not even, you don't even have to argue it, it is by definition less sustainable than a power trend. More craziness can happen. That's why stock markets can flush out people for 15 years as they lose, as they lose value in their most precious stocks. Bitcoin's not growing this way. It's growing proportionally. And this is why I continue to say, in my opinion, 95% of what Bitcoin does today has nothing to do with the money supply. Has nothing to do with, what the Fed says. It just has to do with this, the proportionality of the curve itself. All right. So the volatility, again, this is just, you should just be completely confident. No one knows the future. Don't trust, verify. I'm happy to take donations if you want to use my research for your verification, but these are very encouraging trends for what Bitcoin continues to do. As it continues to move up in price, it's becoming less volatile, not more volatile. I talked about this yesterday just to show it again. I'm going to put this on linear now. All right. It's obviously huge differences because we've been growing a lot. Let's take off this and this. No, it's not going to regrow because I've maxed it at $1 million here. Let's take off this. No. So I remain pretty committed to the idea that let's let this number be the bottom. Right? You see how that number 2 for today's projection, right? And this, by the way, keeps updated. This is a different chart slightly than what I showed you yesterday. This now projects out to September 5th, not to September 4th like it did yesterday. So back in May 2017, the model said the price was going to be 105,282, pretty close to today. But actually, this is an all-time low, all right? And this was a overcompensation for massive growth at the beginning, all right? And then, of course, it goes up during the bulls, and it's been pulled down during this pretty stable period of price action. Same with 2030. We can go to May. We see this is the lowest. This is also a very interesting number, okay? So 520,000 Bitcoin by 2030 was already projected in May 2017. Of course, there were even more bullish figures before that, but as we've talked about, Bitcoin was really finding its legs at this time, so data is less reliable. But we have, again, more and more markets, more and more indicators, more and more buyers to give us confidence in the price action of these models. And yeah, we had a boom in 2017. We had a boom. I'm looking at number 3 now. We had a boom in 2021, and we've been really, low volatility for 3 years now. What is that? What does that 2030 price say? All right, it was last at 600,000 in July 2023 as we were coming down from the last boom. I think we're easily going to get up to project this number again. All right, why do I say that? Because it's happened before. It's happened before 4 times in the life of Bitcoin. I clearly expect another mound here, like here, here, and here. I know it might sound like simplistic and caveman, but that's because I'm very, very confident in this line down here. I could be wrong. Bitcoin could go back to some amazing stability. But again, those that are saying that Bitcoin's going to not have any bears or bulls anymore, you have to tell me why. And if you say that it's the power trend, well, first of all, that's a good step to actually say that. But then why would you say, oh, okay, well, we're still not going to boom over these back up to these levels? I understand because more institutions, this and that. But the power trend itself is already proportional to that. All right. And there were still institutions here in 2021, less in 2017, but you had CME futures. You could short Bitcoin here. So there's a lot of interesting thought experiments here. My conclusion is, sure, it could happen that, Bitcoin starts to grow very stable according to this black line in the future. And then thus that means that our projections will be almost as we would expect, right? Remember, these projections have nothing to do with multiples. They have to do with the black line itself. Okay, so going back to this chart, take off log bottom. This has nothing to do with percentiles. My old chart, it has to do with this line. Okay, so if we go out, here we go. Where's December 2030? Sorry, keep hitting things. $555,000. All right. So back to my chart. Look at number 3, 559,000. It's because I was a couple days off. Let me zoom in for you so you see it exactly. That's the same calculation. $559,284. 559,284 is the current all-time trend line projection. 559,284. Right. So you see my model is working. Number 3 is showing you what today looks like the price will be in 2030. And going back in time, the fact that this is remarkably consistent around this $500,000 to $600,000 number. Again, there's going to be variances. It gets up to 800 here, gets up to 700 here. But we're zeroing in on this 600,000 gives me a lot of confidence. And yet I still have confidence that we're going to have at least one more bull. Might not be by the end of the year. Might be in a year. Maybe it's extended this time. I have no idea. No one else does. But we have them. We have them in Bitcoin. To the chart about Bitcoin and gold. All right. To your question, Ciridon, I'm going to put it here. Sorry, I haven't read the comments in a second, guys. Here's Bitcoin and gold. All right, so this is ounces of gold per Bitcoin. You can see we haven't even started a bull run here. Again, I look at this very positively. I know that gold is a hedge. I know that gold, you can say, is just all that it did was move sideways over the first 15 years of Bitcoin's life, which it did basically. All right, gold was very high in dollar terms right here. Very high. It's close to $2,000 an ounce here. Everything's running to 0 ounces of gold would cost you 1 Bitcoin. But now, it costs you 32, and I still think that's a pretty good deal. I.e., if you're a gold bug and you want to explore into Bitcoin, it's a good time to buy. Not as good as 2023, when it only costs you 9 ounces, but still pretty good. Good morning, Midwest. I agree with you. I do. I don't know if it's this month. I don't know if it's next month. November, December, I feel like it's likely, but hello, Ciridon. No, it's for sure people are talking about it. They will, and I think it's great that they are. But my main thing with quantum is, as someone who is, usually looking outside of the technology, sort of on the outside looking in, everything would suffer if if there was somehow a supercomputer that made it onto the market and one evil genius controlled, everything would suffer if there was such a quantum computer. Your bank account, broken. The security to get into your health insurance company, broken. Everything is broken. So I don't really, I mean, we're all effed if that is really a threat. I'm not saying that denies the existence of a threat, but I think everybody's pretty clear-eyed about that idea, and we can change the encryption and move into something better in the future. Yes, also very good points, RV. I know I sort of swing back and forth with ideas of, lightening up on your Bitcoin or accumulating more Bitcoin, but I think it's big picture what I'm showing you. I would have no idea that the gold price would be here in the let's look at it in the 60th percentile. All right, and then would fall back. Sorry, too much. It would fall back to the the 30th percentile a couple months later, right? From November, December 2024 to here in March 2025. I would have no clue. All we can do is look at what the trend is. And the trend has been like this for gold. And by the way, the fact that gold is also, this also comes up sometimes, the fact that gold in terms of Bitcoin is a power is not unusual. That's not something we should, because gold in terms of dollars is a straight line on log linear. Okay, it's a straight line. You can say we're well over trend historically. I'm not saying that we're at the top of the trend. I'm just saying we're over. There's the 95th percentile. Okay, we're very close. The fact that gold in terms of Bitcoin is this power curve as well, it just means that Bitcoin itself is a power curve. All right. Stocks in terms of dollars are exponential. Gold in terms of dollars is exponential. Bond interest rates, by definition, are exponential. They're yield to maturity. That's a compound growth figure. Everything in TradFi is exponential, but when you try to work and price those things in terms of Bitcoin, like we're doing here with gold in terms of Bitcoin, it becomes power. That means Bitcoin is power. It means the power phenomenon dominates, which Bitcoin is power. So your conclusion should be that Bitcoin is power. It's an interesting comment. As a single gram of gold rises higher and higher, the more sense a purely digital money seems. I'll give it the under. I'll give it the under there. We'll come back to this. It's a good question. I'll give it the under. Here's more major assets. Let's take this off. That's why this stuff's not always on my website. Doesn't load correctly. Let me get this back to you. Okay. Okay, here are the major assets again. Let's look at just gold. All right. As you see, we're way above trend for gold. So if I just go back to trend, which I have to, I'm not doing anything fancy. It's 2033. At 20 trillion is the number we cross. But if we look at fiat money, it's going to take a little bit longer. Okay. So here's sort of both projections. Fiat money is 2041. And I think that if we start to get to, $110,000 of fiat money, that is central bank money, by the way, base layer money, and Bitcoin matches that by 2041, I mean, that's probably a clear sign that something's going to happen before that, right? So, yeah, I mean, what can I say? The next 10, 15 years will be interesting. I'll take the under on your question, Midwest. I think it's clearly the under. Somewhere here, we're moving to like nation states adopting it. Yes, it does. Erickson, I agree with you. Do you mean Bitcoin is decentralized? Yeah. Got it. Oh, but in the context of your quantum question, yeah, no, I mean it's look, from the implementation of SegWit, which is a very important fix because he fixed this thing in Bitcoin, which is called transaction malleability, which was a bug that existed from the beginning. That was Luke Dash Jr. actually that did most of the work there. I think it was at least 5 years. Right? That was implemented and activated in late 2017, August. It was at least 5 years of development for that, probably more. Maybe, yeah, I'd say it's probably 5 years. And then Taproot as well happened. The first papers that were coming out about Taproot, if I recall correctly, was right about that time, 2017, and it took about 5 years as well for that to get included in the code. I understand there are theoretically quantum. I don't want to speak out of turn here, but I understand that there are quantum resilient signature schemes right now, supposedly. So, like in super round numbers, yeah, it would take probably 5 years at least to coordinate the upgrade, the activation into Bitcoin. At least 5 years. How much FUD that really is another question, but I think everybody agrees it should, we need to work on it. They're having conferences already on it, and people are thinking about it. With those types of things, I don't spend my time on, honestly. It's, I'm not saying I don't, you just need to outsource, right? Like, you need to outsource things you can sort of really focus on and things you can't. My coding, my research is more focused on these sort of ideas, which also help keep me sane. But anyway, this was the main message of today's stream. It's a really important point, is that power curves already take into account the liquidity that is needed because it's the same proportional liquidity that it had before. That's not the case with exponential curves. And maybe that's why, you have gold boom for, go to crazy booms. The Hunt brothers tried to corner the silver market. They literally tried to buy the whole silver market here in 1980 and monopolize it. They got destroyed, went bankrupt, went into a 20-year bear in the precious metals markets. And then finally we found a bottom which we could grow from. It's very encouraging. This is really important. It's encouraging that Bitcoin has a chart that looks like this because, yes, it does get overextended. It does have these booms, all right, with euphoria. but it quickly, so far, has corrected itself. And that correction is still on this same scale invariant curve. Here's something Giovanni wrote. Scale invariance. Changes behave similarly across scales. You can look back here. Changes are very proportional to here, here, here. It does not assume some crazy amount of liquidity that you can't understand, because that same amount of liquidity was already in Bitcoin 10 years ago. Proportionally. All right, I feel like I'm lecturing too much now, so anyway, I'm getting close, guys, to the end of the stream, but let me know if you want more charts. You can find the tables here, all right, on the proportionality. I probably need to, relabel these. Like, this is the X factor column for Bitcoin. I need to maybe highlight it more. And down here, this is the X factor column for the evolution of the curve. All right, so this actually shows you in table form, and I've had this for a while, right? But this shows you what I drew here with a different way to show it. And I'm not showing these. Let me go back to the log. What I'm showing you, actually, it's more like this. What I'm showing you in these columns right here, where you see $5.6 billion Bitcoin predicted for today, that is what was being projected out here by year end 2011. Or was that 2010 even? It's 2010, I think. So that was projected on this timeline. And then 2011 is a little bit flatter, actually, much flatter. Only 217 million. But you can see, where we start to get to something like the ballpark, it starts in 2016. Yeah, I think that's a fair point. I agree with you. But the fun thing about this chart, again, which is really, this is like, just imagine. I mean, no one knew it at the time. Like, I first posted it here. Again, Giovanni did it here as far as time, Bitcoin scale invariance over time. But back in 2016, just imagine that there was a model which already existed from the data at the time that it would project $110,000 Bitcoin in September, on September 5th, 2025. Do you guys understand how ludicrous that is? It wasn't perfect on the early days. Less data, you can see we're overheated here. But once you start to settle onto that black line, it's looking pretty good. I should probably do this for gold, but like, this would look insane. If I took a trend line from here to here for the gold market, right? It would not be this line. It would be more like this line, by the way. If I took a trend line, an exponential trend line from gold from $40 an ounce in 1971 to 800 and on a monthly end 630, but it was even higher. You would have like quadrillion-dollar gold today. I don't know what the trend is. I guess I should run it for us all to see. It would be insane. Then from the 20-year bear, we'd have insane numbers like negative. Be a negative trend, obviously. And then it go back again, sideways. Exponential is a dicey way to grow stuff. It's why I like the analogy that Jeffrey West used in his book of cities. Cities grow in power. So we're not like exploding skyscrapers into the sun. We build high skyscrapers, but in cities, the infrastructure is different. Not everybody needs a car. Not everybody needs a parking space. It's a totally different thing than, say, global population growth, which is exponential, by the way. But cities, the population growth of London 200 years ago was way faster than the population growth today. He even has that, I think, in his book. Let's see if I can find it online. London population growth, power, images. Power law. It's interesting. It's amazing how you don't see like some really good charts, even with a Google search. Let me see if I can share you my Kindle book, because I know it's in there. Let me just do this quickly and then. One second. Let me know if anybody's got questions. Yeah, I mean, it's. Well, to be clear, gold is strong here, right? It's strong versus Bitcoin relative to the trend for the first time in a while, right? Like it does look like a meme coin here. I mean, the 99th percentile, which is where we are here, right? 100th is here, 90th is here. Okay, it's not the 90th, but it's probably the 93rd. This is the gap is not linear here. So anyway, the 90 probably 5th percentile is 30 ounces of gold back in 2017. Now that's where we are now. So of course gold is always decreasing in terms of Bitcoin. Gold value. But it's actually abnormally strong, I would argue, right? Because remember, gold would need to be, the fiat dollar chart is we're right on trend, right? So 90th and 10th. Here we are, right on trend. But with gold being abnormally low, it's actually an opportunity if you have gold to buy Bitcoin, I would argue. Because we're still at that 30 ounces of gold per one Bitcoin. And that's just not where sort of the rest of the market is for Bitcoin at the moment. Because gold is screaming. China's buying a lot of gold, doing a lot of crazy things with gold. All right, let me see if I can share this Kindle screen really quick. Hold on. How do I search? Oh, this is too much. You really would think, you could find a Google. I think I'm going to find it. One second. Sorry for the dead time. Just give me 1 second. He's got a whole chapter on scaling cities in his book. 1 second. I promise it will be worth it. I promise it will be worth it. Got many chapters on cities, I realize. Oh, come on. Sorry for the dead time. I still can't find it. If anyone has the Kindle edition of that book and you see it, I could share it. It's got a lot of good charts. Anyway. Yeah, I agree with you. Definitely. Midwest picker. I feel the same as well. Anyway, the idea is if you look at, say, the population of London or of many cities, it would look like this on log. All right. And likewise, the growth rate, important point, not the value on log, but the growth rate would look like something like this, which is what Bitcoin's looks like. Sorry, guys. Too much dead time here, but I'm finishing up. So you see how the growth rate was high here? Here's the growth rates, right, for Bitcoin. See how it was high? This would be like London 200 years ago. More people coming to the city in early days, but it doesn't always grow at 1,000% per year. It just doesn't. It will cool off. And this is what Bitcoin does. So here's the curve, way out in the future. And we're going all the way to 2167 here. All right, so Bitcoin has cooled off tremendously from thousands of, okay, we're looking at the black B, the green, TTM percent on price. At the very beginning, we caught 200,000% per year. No, I don't want on price. I want on the curve, sorry. On a curve, we caught 1,500% per year. Even more, why can't I catch it? 2,000% per year. That quickly came down to where we're right now at 44%. We're going to get close. The year end is going to be 42% per year. See? September 2025, 42.9%. We're moving. We should be right at 42% by the end of the year, as I think I show here. There you go. 42% a year on my website. So it is true. A lot of the growth in Bitcoin has been taken, no doubt. But still 42% per year is monstrous. Let's see how long it takes us to get to 10% per year. Right there. 2070. $200 million Bitcoin. I know Bitcoin won't be priced in dollars at that time. It's just illustration purposes. And then, more stable as we go on out. I will reiterate, though, and I don't think anyone has figured this out yet. I've said it a lot recently, is debt won't work with this type of a curve, this type of an idea, right? You can't have ever compounding fiat interest, loans, mortgages in Satoshi terms if you have a limited amount of Satoshis and if the system itself grows in power. Because it's just not, the calculation won't work. You need a straight line on log scale for that stuff to work. You need this. And we have this curve. So someone's got to figure that out, how interest works in a power curve environment. Or we move into a equity only scenario with all of our contracts. But that also seems kind of weird, to be honest. And it seems, like, are you going to work into an equity only contract with your short term suppliers of your business if you need a line of credit? No. So someone's got to figure that out. Um, Depends on what your time frame is here. Siradon, what is your time frame? So we can do, let's take the regression as an option. Let's go to the end of the year. Just to keep it simple. All right, what's the actual? Is it 350 right now, or is it? I know it keeps rising. Gold. Not 350, 3,500. Hold on. 3,550. All right, so 68 ounces of gold on the trend, right, by year end. So that is, let's just keep the same price, 3,550 times 68 is $241,000 Bitcoin. It's just one calculation. I have no idea if it's going to revert to trend or not by the end of the year. Maybe we stay low. Maybe we go back to number 8. I'm not sure. But I've said this a lot. I do think that we will pump. Might not even be this year. It might be the start of next year. I can't tell you timeline. But if we see the way that the price is pumped in the past with the same proportional amount of liquidity and interest in Bitcoin, why would we not pump again? I agree that after time, these things are going to settle down and we get into a trend line that's like really, really narrow bands, really good bands, right? Like this. Maybe, let's go like that. Sorry, it's 6 and 7. Okay, so I agree. We could even, as we start to move into like really sound money, and then eventually we might move into Satoshis as like a standard most people are using. We could have bands as tight as this. My point is, they're not as tight as this right now. Yes, they kind of have been in the last year, but not in the last 3 years. So I go back to the same point. I don't know when the pump could be, but I believe that there will be a pump based on the past. If there is no pump, I will correct myself and say, all right, we've moved to another plateau of volatility. This thing would be overestimated, actually, and somehow we go even lower volatility than we thought based on the model. I think I might have just answered your question, Midwest, without seeing it, but that's my thoughts. I cannot tell you timelines. Thank you, Siradon. Appreciate it. No, it's totally fine. A lot of tools anyway to help with that. Feel free to chat GPT, the translation, or Grok, or whatever. Or Google Translate. Does anybody use that anymore? No, I appreciate it. But back to the cycles, just to we'll finish off the stream here, guys. Here's what I think. I think clearly this, and this was driven by mining. The mining cycles, the halvings. They're every 4 years. They happen 18 months after the pump happens 18 months after the last halving. Things sort of slowly eke out into the ecosystem, leak out into the ecosystem, and people understand it. It's clear that they have lower blow off tops each time. Okay, if we look at, say, where we were from the 100th, we were pretty high here, especially with this like kind of crazy pump before the first Mt. Gox hacking in 2011, which happened exactly right here. No, when it went to 35, right there. It's right there, June 10th. It's clear that from these tops, I know you can't see it here with the tooltip, but we made the all-time high of 7.8x the trend here, a little bit lower than that in 2017, but really a huge blow-off of 2017. Way muted and a double top strange in 2021. Anybody's guess what's going to happen this time, but I'm not invalidating the 4-year. I'm not going to invalidate it. Having said all of that, it is also inevitable that Bitcoin will eventually become pretty solid, sustainable, reliable as far as the protection of purchasing power. I personally just don't see that anytime soon. You know, I could see blow off top after 6 months. I could see scams reaching very high into the echelons of certain countries with certain people, connected political individuals. You know, we had the FTX, the Celsius, all these clear scam. I'm not saying FTX was, but Celsius was a clear unsustainable promise. Terra, Luna, all that stuff from the last cycle. I can clearly see things like that happening again in the broader crypto ecosystem. And I can see Bitcoin dumping. So it might sound kind of caveman or basic. Like, I do not know the time frame, but I'm also not willing to say that they're not going to happen just because we've had, you know, a year here of sort of stability around the trend. And also, crucially, the people that usually say there's not going to be a dump don't believe in the power law or don't understand the power law. I've never really thought about it as far as a scale invariant way. Yeah, that's unbelievable. So in the Lira, obviously there's not a power law. There's no power regression there, probably. I haven't run it, but you're in hyperinflation territory of Bitcoin. This is an interesting topic for another stream, but I think it's we're a long way away from that from the dollar. Could be famous last words, but I think we're a while from it for a variety of reasons. But we'll see. Your sentiments are well taken, though, I understand. Yes. Yes, there's the one way to put it. Midwest picker, I agree with you. I love that caption, by the way. Is that your daughter? I got to get back to mine at the moment. So thank you, guys. Thank you for tuning in. I always do these longer than I intend, but that's fine with me. Everybody have a great weekend. Thank you for watching. If you can, if you want, little lightning donation, little on-chain donation, it's always right here. Just hit that button and you can pull up a an invoice. So no promos, no ad breaks, value for value, no subscriptions. Thank you, sir. Hey, Casa Murphy, how you doing? I assume so too. I assume this for now, based on. We can revisit this, guys, on Monday. I got plenty of charts to show you here. Think of the FedWire chart. $1,100 quadrillion going through FedWire, only $7 trillion going through Bitcoin. I just don't see how all that funnels into Bitcoin overnight. Thank you, RV. All right, guys. Great weekend. Take care.